Hayden, what did you, on first glance, look at into this data, and what did it show?
Yeah, first glance, obviously really, really weak numbers. But one of the things I would point out, the credit impulse you were just talking about was really around the local government bond issuance that they did. They happened to do that really late in the year. Then they instructed the provinces to go to work and start putting that money to work, and they were going to audit them sometime around November. So that's right now. So imagine you need to get the workers in, you need to get the trucks in, and you need to start building with that money, that credit impulse. So I don't think it's going off a cliff here. It's probably just likely to bottom out, and you'll see some activity, but that won't show up in the official statistics until somewhere around March, April next year. But this is no big bounce back here. This is still a slowing economy, and what we're describing is an L-shaped recovery here, just bouncing along the bottom. And the main message is China's not going to save the world here. They're still on this deleveraging campaign. And then on top of that, I'd expect rate cuts to come through in the first part of next year, not in the end of this year. Usually we have a bit of a squeeze in the funding market, so the front-end yields will go up. It's a bank-dominated market, so they're unlikely to step in and buy bonds. Come the new year, that's going to be the time to buy Chinese bonds.
Yeah, you mentioned about the yield pickup. I mean, basically, Chinese bonds in September and October were headed south in one direction. What did you make of this route? What was really driving it here? Because, you know, the economy is slowing, and yet we haven't seen that kind of haven drive into these bonds.
We always have this seasonality. So coming into the end of the year, we see this spike up in the 7-day repo, funding pressure. We can still see with the small banks in China who predominantly play the repo markets, they're not exactly working efficiently. You've seen some of the headlines where they potentially need to bail in some of those banks. So all of those firms are still seeking money through the repo market and pushing up cash rates. That pressure's not going away until year end.
You're saying bail-in's going to take place here?
Well, they're talking about it, right? There's rumours at the moment, so you've got 3,000 small banks there. Well, what could they do with them?
Well, the idea is to have consolidation there, but does that involve a bail-in of the customers of the banks? That's the thing.
Well, we've had some runs on some very, very small banks right now. They've obviously stepped in and supported them, same as what we saw from Baoshong Bank in the middle of the year, where they did officially say it was a default, and then officially it's not a default, and everybody seems to have got their money back. So we're in this seesawing pattern here, but at the end of the day, the government is looking to make sure that people now realise there's credit risk in the economy. And that's important because that creates a credit culture, and that creates a lending culture, a differentiation in pricing.